Welcome to the Kapital News. I am your host, Alex Karitis. Today is September 20th, 2019. Thank you so much for joining me. It's Friday, and thank God, what a week this has been. And I imagine we're going to be in for some volatile weeks for the rest of the year. Given our volatility model with the markets, given all the geopolitical tensions and risks that exist, we got a lot to talk about this evening here. We have China cuts their visit short. We have President Trump. He wants a complete deal with China, not a partial deal. Remember, a couple weeks ago he was saying, maybe he would ponder a partial deal. Nope, that's off the table. Of course, this man goes back and forth, but at least today, partial deal off the table. The repo market has continued for the fourth straight day, and the Fed will extend this program. We're going to talk about that. We'll have a brief discussion in regards to the whistleblower story regarding President Trump and perhaps the Bidens and Ukraine. We'll have a little conversation on that. And we have Trump authorizing U.S. forces to be sent to Saudi Arabia. That broke this evening as well. And we have the UN General Assembly gathering in New York next week. But first, let's get the market news out of the way. The S&P shed 15 points today and is below 3,000, that key market level. Now, 3,000 is not its all-time high, but that is a key technical level. It's a psychological level, and it broke below that over Friday and over the weekend. So we have the Dow also losing 160 points for the day, and it is below the psychological level of 27,000. The NASDAQ lost 65 points, a loss of 0.8%, and the Russell 2000 lost 2 points for the day. The Dow Jones Transports shed 0.5%. And the New York Stock Exchange for the third day in a row was down, but relatively flat. The oil markets were also relatively flat. WTI is still trading at around $58 a barrel. Brent is at $64.50 a barrel. Gold and silver caught a bid, both up over 1% for the day. Gold is now at $1,516 an ounce. Silver is trading at $18 an ounce. The U.S. 10-year Treasury caught a slight bid today, so again, another little flight to safety, but not by much, and it is now yielding 1.76%. The VIX, however, on the back of the down day, gained 9 percentage points for the day and is now at $15.32. We said keep an eye on this. Once it starts getting below 15, below 14, below 13, look out. This thing has the historical tendency to rebound and can do so sharply. FedEx, just because we've been talking about it this week, shed another 2.4% and is now trading at $149 a share. This is below where it was during December of 2018 last year. And obviously this is on the back of our podcast from yesterday where we talked about the Cass Freight Index and the author of that report stating that given that index, they are forecasting that GDP in the United States will be negative. It will be in contraction by the end of this year. We also have U.S. Steel losing another 2.2% today and is trading at $10.81. So the markets were up for most of the day, but then all of a sudden something snapped. And of course it was a headline, and I think it was probably somewhat induced by Donald Trump, perhaps, or perhaps this was what China was anticipating to do all along, and that's why this podcast is titled U.S.-China, Who's Playing Who? Because we stated earlier in the week that the Chinese delegation, the lower-level Chinese trade delegation, was coming to the U.S., and then as a gesture of goodwill, at least that's how it was being touted, was that the Chinese were going to be traveling through a couple different states to go visit some farms. Well, that portion of their visit has been canceled. Now, again, was that the plan all along? Or was this Donald Trump changing his tune and saying, well, I don't want a partial deal. And maybe the Chinese were going to come over to work out a partial deal, to buy more agricultural products, that type of stuff, to appease Donald Trump and his base a little bit. Well, Donald's now saying, no, I want a complete deal. Well, I don't think China is going to saddle up for a complete deal, whatever that might mean in Donald Trump's mind. Okay? The other thing that the president stated today is that he doesn't need a deal before the election. Well, this is completely different now. This is a total now wait and see. We're in no hurry again. We're back to this headline. It's hurry up, we need something. President Xi and the Chinese aren't holding up their end of the trade truce. Let's slap on more tariffs. It was giddy up, giddy up, giddy up, let's go. Now it's, we're in no hurry. We've played this before. We've seen this show before. But I don't think I've ever heard the president say, I don't need a deal before the election. Now, of course, he said, I would like to get a deal before the election. The Chinese definitely want to get a deal before the election because it's going to be worse after if he wins, because then he's really going to play hardball, and then they're going to have to deal with him for another 4 years. So we've sort of heard him say that, but I think this is just a little bit of a different tone. And given the fact that the trade delegation was here for those lower level talks, I think that was not so much the quote-unquote goodwill gesture coming from the U.S. side. Now, of course, I think this is fine. I mean, I want this trade war to be over. Nobody wins these trade wars. It's not good for anybody, and we're seeing that with the global slowdown, and it is starting to impact the U.S. We see it in the data. We talk about those data points all the time. We've posted various video presentations on the capitalnews.com where we talk about that, and we're going to continue to do so. So I hope you're checking those out so you can see the data that I talk about here on a daily basis. So we're going to continue to turn those out as well, and I hope you enjoy those. So a little bit of a difference in tone. So again, who was playing who? Was this what China was anticipating to do from the beginning? We're going to come in, because if so, then you could view this from the Chinese perspective as a power play by China, because China's going to come over here, they're going to have these goodwill talks on Thursday and Friday, and then they're going to stay the weekend, and they're going to go to Montana, and they're going to view some farms and do this, that, and the other, and everything's just going to be peachy, right? But now they canceled that. So if they were planning on this, were they planning on sending a message to Donald Trump saying, look, we're in the driver's seat now, buddy, because we're coming over for these talks, but guess what? We're not staying the whole time that we said. And what happened? The markets sold off because the markets were trading in the green for most of the day. Once this happened, boom, they sold off and they ended in the red, as we just explained here at the top of the podcast. So it's a power play. Potentially. Or were they responding to Donald Trump, who could also perhaps doing a little bit of a power play himself, saying, look, I got an election coming up. I can't risk striking some sort of a deal only to have the Chinese back out of it right before the election, and then the Democrats are going to feed on that. Whoever he or she may be, that Democratic nominee, is going to say, look, we can't deal with this. This guy can't close. He's supposed to be the deal maker of a century. He can't close this deal. Do you really want this chaos for another 4 years? And that's going to be an argument that I think would appeal to a lot of Americans to say, no, we don't want this chaos. We don't want this back and forth trade war to continue for another 4 years. We don't want all of these headlines. We don't want all of these tweets, these promises of a deal, and then it happens and then it's taken away. We don't want that. That will appeal to a lot of Americans, and it will not look good for Donald Trump. So we've stated this here many, many a times. Now, of course, we've sent a letter to Donald. The White House wrote one back. It was a standard thing. We talked about that here earlier this week. We tweet at the president. Now, I'm not saying that he listens to me, not by any stretch of the imagination, but the man doesn't sleep. I do tweet him. I do send some of the pictures that I put up there on our website and on YouTube, and that goes out there on LinkedIn and Twitter, which is how I communicate with the president if I respond to him. That's where these podcasts go on a daily basis as well, out on Twitter. Maybe he fancies the nice pictures of himself that I send out there, and he said, oh, let me click on this, and he listens. I highly doubt that's the case, but look, this is simply another prediction that we said was likely to happen, and it appears that it could be in the process of happening, where Donald Trump and company are going to step back and say, we're just going to play this out. We're going to see how the economy moves. We're going to see what the Federal Reserve does. Look, he has the boogeymen, right? He wants as many boogeymen as possible so he can blame them. He can point the finger at the Federal Reserve, which he has done continuously for the past year and a half. Okay? And it's getting more and more aggressive. He wanted Jay Powell and the Federal Reserve to cut 200 basis points, take it down to zero. He'd be happy with negative interest rates. He'd be happy with more quantitative easing, which we're going to talk about here shortly. Didn't happen. They cut by 25 basis points, not even close to what Donald Trump has been tweeting and stating. Calling Jay Powell and the Federal Reserve terrible communicators, which they are. And, a whole host of other things. So he wants as many people to blame as possible. He's got the Fed. He's got China. To some extent, hopefully less so, but to some extent he might still blame Mexico. But, he's trying to get the USMCA deal signed, and he's starting to call it a bipartisan deal because he wants this thing signed. So why would he want this signed and then start pointing the finger again? But it's politics. He might do it. I hope he doesn't, but he may. So the Federal Reserve, China, those are two big boogeymen. He can blame the finger at them. He can continue to blame the Democrats for their continuing investigations into the Russia hoax, now into the Ukrainian whistleblower story that's continuing to erupt. We're not speculating here on the Capital News. I do my best not to. And if I do speculate, I let you know that it's speculation. All that I know is that the liberal mainstream media on MSNBC, on NBC, on CNN, they're going ballistic. They're hyperbolic once again. And they're focused all on this. They have their side of the story that's focused on Donald Trump doing something illegal. On the other side, you have Fox News. They're siloed in. They're saying, no, this isn't about Donald Trump. This is about former Vice President Joe Biden and his son Hunter Biden and some business dealings that they were doing over there in Ukraine. And it's pretty much a fact that Joe Biden, when he was vice president, was over there and did a quid pro quo. So why is it okay for Joe Biden to do a quid pro quo, but it's not okay for Donald Trump to do one, if that's in fact what he was saying? We don't know all the facts. So no matter who you're listening to, MSNBC, CNN, Fox, the Wall Street Journal, nobody knows. Nobody knows. And this is exactly what we went through for the past 2 years with the Bob Mueller investigation. You have everybody siloed in. It causes more divisiveness. This is crazy. We got to get above this because nobody knows what the truth is. That's how crazy it is. That's why I say we're about peace and prosperity, free market capitalism, and the truth when we can find it. Well, the truth is very hard to find right now, so I'm not going to speculate. But as this thing continues to make its way through the headlines, which it will continue to do for quite some time, I imagine, I'll keep you posted. But you're going to see it all over the place anyway. So there's a lot going on. But who's playing who? Donnie Boy, he still have some tricks up his sleeve, or is this the Chinese power play? We're kind of, like I said, like I've been saying all week, they're going to extend an olive branch with their left hand, but in their right hand, they got a clenched fist and a club in it. I don't know. It appears that Donald Trump is still anticipating that there are going to be higher level talks coming in October, so we'll see what comes of that. But the markets did not like it, and despite the fact that the Federal Reserve did cut interest rates, we still did not make new all-time highs on the major indexes, the S&P, the Dow, and the NASDAQ. And the Russell 2000 isn't even close, although we have had that strong rally for the past week or so. So we'll keep you updated on all of that. Now, the repo market, back to the Federal Reserve coming back in as the savior of the day, has continued for the fourth straight day. Now, the cap on the repo market is at $75 billion, and we have had multiple days where that has been oversubscribed. That is to say that it has been higher than $75 billion that has been requested and demanded from the financial system on an overnight basis. This is not good, ladies and gentlemen. And what we are hearing now from the Federal Reserve is that this program will be extended until October 10th, 10/10. Does this mean that quantitative easing is back on the table? Interesting question, isn't it? And I'll tell you why. Because if you look at the Federal Reserve's balance sheet, just from a week ago, if you go back from 9/11 to 9/18, because that's when they update this data, the Federal Reserve does. So from 9/11 to September 18th, their balance sheet has increased by $75 billion. Now, where was the announcement that they were starting up QE again? There wasn't. So this is something we have to keep our eye on as well, because all they said was, we're cutting interest rates 25 basis points. We'll continue to be data dependent. We'll continue to monitor the situation. There's a lot of geopolitical tension, geopolitical risks all over the place. This trade situation is continuing to unfold. So we're standing at the ready to do things. And then, of course, in the run-up to the Federal Reserve's decision, we've had banks going to this repo market, which they have not done. They have not done since 2008, pretty much in the midst of the great financial crisis. So it's been over a decade since we've been back to these markets, because typically speaking, the banks do this all on their own. They don't need to go running to the Federal Reserve to intervene. Because, you ready for this number? $1.3 trillion. $1.3 trillion is the amount of excess reserves that exists within the banking system. Okay? Now, we explain this at length in our book, The Cynic's Guide to Investing. And again, a big thank you to all of you who have been purchasing that book, especially on the Kindle version. I do appreciate it. Tell your friends. Holiday season's coming up. Hardback, paperback. You can find it on Amazon.com or BarnesandNoble.com. Put it in a stocking. Educate people, please. We explain the financial system. We explain what excess reserves are. Banks are required to maintain a certain reserve requirement, okay? If they fall, they have to comply with this on a daily basis, all right? So if they fall short of this requirement, banks go to overnight lending amongst themselves. So if a bank has more reserves or excess reserves than what's required, they can use that money to give it to banks on an overnight basis that fall short of those requirements. Okay, and that's how they make their money. And I just came across an interesting presentation the other day, and I did not know this. It doesn't surprise me, but J.P. Morgan, of course, one of the largest banks, or it is the largest bank in the U.S., makes 20% of their profits. 20% of their profits come from overnight lending. Is that ridiculous or what? That's crazy. So if you think that the banking system, these large banks, really want lower interest rates, you're somewhat crazy. You're somewhat crazy. And this is why we say we don't want negative interest rates here. I don't like the financial system we have here. I want the Federal Reserve abolished. We talk about that here every day. But to say that we have to go to negative interest rates, no can do. Can't go for that. So, because if you look at Europe, it's decimating that financial industry. It's not just the banks, but insurance companies. It's decimating the Japanese financial system. And it's one thing for banks to go down. It's another thing for insurance companies to go down. You have an insurance company go down, you got a big problem. You got a big problem. If you remember from the financial crisis, you had AIG start to crumble, okay? There was no TARP funds for that. That wasn't a bailout from the taxpayer, all right? That was a bailout, an $85 billion bailout, if I remember correctly, from the Federal Reserve. They did that all by themselves. Okay, because that would have been another Lehman-like event in the midst of a Lehman-like event, all back in 2008. That's how interconnected the system is, and I'm just telling you, if insurance companies go, look out below. It's one thing for banks to go, it's another for insurance companies to go. So this is unbelievable, because you're talking about over $200 billion being basically created out of thin air for an overnight basis. Something is not right underneath the surface, ladies and gentlemen. I've been saying that all week. And now I said yesterday there were some rumors that it was likely going to continue for a fourth day. That turned out to be true. And now we know that this is going to continue until October 10th, at the very least. At the very least. And then what's going to happen afterwards? Is this going to become a permanent station for the Federal Reserve? Are they going to do this every day thereafter? Or are they just going to have to come out and say, well, we got to start QE up again? We're just going to have to do it. I mean, at the height of their balance sheet expansion, they got to about 4.6 trillion. And remember, folks, it took the Federal Reserve its entire history from 1913 to 2008 to get to 800 billion. Okay? Then over the course of a few years, it goes from 800 billion to 4.5 trillion dollars. All right? That's quantitative easing. We have a video up on the Capital News where we talk about this. We talked about this at the end of July. That's that video presentation. Are central banks trapped? It was very timely, and it appears that they are trapped. No surprise to us here. But check that out so you can actually see the data that I look at. You can see the graphs. See how crazy it is. And like I just said, you have the Federal Reserve. They have just increased their balance sheet once again to $75 billion. I'm sorry, by $75 billion. So, excuse me. So what we have here is basically stealth QE. When are they going to come out and officially state that it's QE4 once again? And now, how are they going to frame it? Are they going to say, this is not an emergency measure anymore, that low interest rates and quantitative easing is perfectly fine? Because the funny thing here, folks, is quantitative tightening, of course, the pulling back of liquidity from the system, so the opposite of quantitative easing. Quantitative tightening has been in place for, a year or so, right? They got down to 3.7 trillion. 3.7 trillion from 4.6 at its peak-ish. They were supposed to normalize their balance sheet. Normalization would say, well, we got to get back to about 800 billion because it took us 100 years to get to 800 billion. Being at 4 trillion, you're not even close. And now they're reversing course. And that's exactly what we outlined in our video presentation, Are Central Banks Trapped? We said, look at this graph. Look at how it's been steadying off. It's been plateauing for a while. They were saying, all right, we're just going to cap it here. We're going to see what happens. And then quantitative tightening started, and you get to see the fall off. And then we said, well, it's slowing down here. Are they going to start going back up? And if you look at the graph now, if you go on the Federal Reserve's website, if you look at Federal Reserve Economic Data, FRED, F-R-E-D, you can Google it, you can find it. You start to see this sharp increase, and that's representative of that increase of $75 billion. So for all intents and purposes, quantitative easing is back on the table. No surprise to us here. And what a shame. The interesting thing is going to be, how will the stock market and other financial markets, for that matter, respond to this? Because for the past decade, it quote-unquote worked to save the system. It reflated financial assets, and it has inflated financial assets. That's why we have such income inequality, not only in the United States, but the world over. The world over. And we're going to continue to see more uprisings, whether that's the Yellow Vests in France, whether that's the Hong Kong protests. Who knows what's going to happen with Brexit? That could be bad either way. With a deal, without a deal, they stay, they go. That could be bad either way. We have protests in Egypt. We have protests in Algeria that is not getting a lot of news coverage. This is starting, folks. This is the little ripple that goes all the way across, and we got to keep our eyes and ears on all of this, because I'm telling you, it's all interconnected. Believe me when I tell you. And the other thing, I mean, I have to stay on this because this is just, nobody's being honest about this. Nobody's being honest about this. $1.3 trillion in excess reserves. How is that not enough to give to somebody? This is about trust and confidence. So something's going on behind the scenes where these large banks who hold the majority of these excess reserves, they don't want to give it up, even on an overnight basis. So something is shaky beneath the surface. And of course, the Federal Reserve isn't going to tell you this. They're going to say everything's contained. This just had to do with corporate taxes coming due and some treasuries that were maturing and this, that, and the other. Their standard line, everything's contained. Just like Ben Bernanke told us a decade ago that subprime's contained. You better be prepared. You better be diversified. That's all I can tell you. President Trump authorizes U.S. forces to be sent to Saudi Arabia, and I also believe to the United Arab Emirates for, quote, defensive reasons only. All right, you want to buy defensive reasons only. All right, we'll see what happens. Now, President Trump was hosting the Prime Minister from Australia with a formal state dinner and all that jazz. And he obviously was giving a press conference this afternoon and was taking questions from the reporters. And this was obviously front and center. And he's like, look, as far as I'm concerned, I've practiced some very solid restraint. And he has. And we commend him for that. We have for a daily basis, because he's had many, many opportunities that he could have used for a lot of it. He could have used a lot of excuses to say, look, we got to send a message to Iran. You're not going to seize these oil tankers. You're not going to bomb these oil tankers, which I don't believe they did anyway. I think that was a false flag in the making. Shooting down of the drone, of course, they admitted to that one, so that's a different story. But rightly so, I believe. Donald Trump said, look, yeah, sure, it was a lot of money. It's good technology, but nobody died. If I respond, people are likely going to die. Could be innocent people, and it's sort of not tit for tat. Then you have, obviously, last weekend, the strike on the Saudi oil facilities. He once again practiced restraint. We said, fantastic. This is oil. It bubbles out of the ground. It's steel. It got mangled. You put it back together. You weld some more pipe together. Nobody's got to die over this. But now it appears that we are continuing to up the sanctions on Iran. I think, I paraphrased the president this afternoon when asked about that. These are the harshest sanctions that have ever been placed on any country ever. So is that also part of the U.S.-China trade talks? Again, everything's interconnected because China gets a lot of oil from Iran. So there's a lot of geopolitics at play here. Everything is interconnected, and it's hard to keep track of everything, but everything is connected, some shape or form. And then lastly, we have the UN General Assembly gathering in New York next week. There was some questions as to whether or not the U.S. was going to approve the visas of the Iranian delegation. Those have been approved, so I imagine there's going to be a lot of aggressive talking, a lot of finger pointing, a lot of finger wagging from the President Rouhani of Iran, and perhaps the Ayatollah as well, if he speaks before the General Assembly. Look, let's pray for peace and prosperity, like we always do here. But things could get out of hand very quickly, extremely quickly, because if we go into Iran, I just don't think it's going to be that swift. We have obviously more military power than they do, but if we get involved with Iran, I think we're opening the door for China to get involved and for Russia to get involved as well. So, I mean, this could turn into World War III quite quickly. And I don't want to say that. I don't want to be hyperbolic. I don't want to make exaggerations. And I really don't want to speculate on that. But if we do get involved with Iran, this ain't Afghanistan and this is not Iraq. This is a completely different story. And they have a lot of enemies, obviously, between Saudi Arabia, UAE. They're not friendly with each other. There's a lot going on. So I think if we do get involved militarily, this could really open a can of worms that could get out of hand extremely quickly. So let's hope that doesn't happen. With everything that's going on, I imagine that I will be doing a podcast this weekend, either on Saturday, but most likely on Sunday evening. So I hope you check that out for a week look-ahead segment, and we'll catch you then. Enjoy your weekend. It's been a pleasure having you as always. Please like, share, subscribe, get the word out, and leave your comments. We do love hearing from you. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Karitis. Godspeed.